Hello, good evening, afternoon, morning, whatever. So today I'm going to be talking about something a little more advanced than I usually talk about. I usually talk about more like basic, like getting into investing topics. This is more advanced and yeah, well, it's for everyone, but some of the words you might have to look up or things like that. So I'm talking about basically planning in this uncertain time and trying to find stocks that you can invest in at a low price, but also will survive this lack of income flowing into them right now. So this is basically about the Altman Z-score. So an Altman Z-score is a score created based on about 7 numbers from a company's balance sheet um, that will determine basically how safe the company is within the next 2 years. If a company has a score below 1.8, then they will probably be in financial trouble or peril within the next 2 years. If they're over 3, then they should be pretty safe. So basically, that is a little bit of a range. Some companies have very low Altman Z scores, other ones have quite higher. So just to give some examples, there's a JetBlue, very popular airline that I'm sure most of you have heard of, that has a 1.1 Altman Z score, which is terrible. And a lot of airlines have really bad Altman Z scores now because of all the lack of travel that's happened for an extended period of time. So that's not great for them, but it'll be interesting to see because what's going to happen to them. And yeah, so that'll just be interesting to see how that plays out and if there will be government bailout specifically to them that on a larger scale or things along those lines. For a really good one, there's a company called Copart, which has a 16.3, which is one of the highest, if not the highest, Altman Z scores of a publicly traded company. Super high, crazy. So basically what Copart does is they own a bunch of junkyards, which like tear apart old cars and then sell the parts for money, like whatever they can strip out of a car, which seems pretty reliable. You buy a junkyard, sell what you can, and then yeah, whatever, throw away the rest, I guess. So that's an interesting one. And then a more like safe but a lot closer example is Lockheed Martin, which is they make a lot of aerial military equipment, fighter jets, drones, all things like that for the military. And so they have a very solid Altman Z score, but that's a more realistic one. And I believe Apple has an Altman Z score of 3.2. So now that you've got some examples, let's break it down. So I'll have the actual formula in the description down below, but so you can calculate your own. Also, you can just look it up with a website called Koifen. They have it listed right in the long-term statistics, I believe it's called. And yeah, so basically I have a list right over there of 7 numbers. So the first one, this isn't necessarily in order for calculating, but it's a relatively complicated algorithm. So yeah, first one that I'll list is EBIT. So earnings before interest and taxes. So that's interesting. You can usually get EBIT and then just subtract interest from that, and that'll give you the same number, or at least close to it. And that's what I did when I calculated my own Altman Z scores. I did check them all with the actual ones, and they were all pretty close. But yeah, so there's that one, and so I'm just going to go through all of them, and then they all get divided by different things. Next one is market value. So this is the stock, and this is a very controversial one and interesting one to consider. So market value, I hope you know what that is if you're thinking about investing. But basically, there are a lot of companies like Tesla, which are very volatile, financially speaking, and very not safe by any standard, except for the Altman Z score, because they have such a high market value and the share price is still rising by a lot of the time. It throws off the Altman Z score. So then you also have to consider how the share's doing compared to this, um, and weigh that against it. Because you could have a falling share price, but a really good Altman Z score, or vice versa. It's weighed at times 0.6, whatever it is. So it's it's counted as less than most of the other ones, which are multiplied by like 1.5 or so. The next one is total assets, and usually that divides a lot of these, and that's just a standard one. A company, because it's all about, a lot of this is scale, because if you have $1 million in debt but you're a $2 billion company, that's fine. But if you have $1 million debt and you're a $2 million company, that's quite a bit of debt. So you have total assets, and then another one is total liabilities. So then you can compare those and get an idea of how safe it is. So obviously you want more assets and liabilities, and that really helps. The next one is retained earnings. Pretty self-explanatory, I feel like, the earnings you retain. Working capital. So capital invested, or anything that's working or making money. And the final one is net sales. So I'll just do a quick explanation if you don't understand the idea of gross and net. So if you think of gross is all the fish in the sea, and net, and you're a fisherman, net's what you're taking in. So it's like if I want to make lemonade and I sell it for $5 per cup, I have a gross profit of $5, but it cost me $2 to make it, $3 in net profit. So basically, after I take away the costs, that's what net is. But yeah, that basically gives you an idea of what Altman Z scores are and what factors come into play. And remember to check down below to see the formula if you want to calculate your own. Go to koifin.com. Not sponsored. But yeah, that's where you can look at some. And also, while you're down there, if you want to just hit that red subscribe button and add a like, it really helps the channel. So thank you. Have a great rest of your day.